This software company just jumped 11% after earnings. But 11% in a single session for a company growing revenue at just 12% a year. If you've been around here for some time, you'd know that the math doesn't add up unless something deeper changes in how the market sees this business. And I think most people are reading this move wrong. Look, if you're short on time and you don't want to listen to some guy with a cat avatar ramble for 10 minutes, here's the one thing you need to walk away with. This stock didn't pop because of AI hype. It popped because the market finally stopped treating this company, which is Okta, like a dying SaaS company, and started treating it like a cash-generating identity platform that happens to sit right in the path of where AI is heading. That distinction matters a lot for whether this move holds or fades. If that sounds like something worth understanding, stick around. So real quick for anyone new, I'm DataCat. I spent years as an analyst inside a Fortune 50 company, buried in spreadsheets, sitting through meetings that could have one Slack message, slowly losing my will to live under fluorescent lighting. Classic corporate stuff. Eventually started this channel about 7 months ago. It's still small, still growing. So, yeah, a like genuinely helps. YouTube's algorithm is kind of like a cat. It only pays attention to you when it feels like it, so every like is basically me shaking the treat bag at the algorithm. Subscribe if you want more of this. No courses, no paid groups, just research. Let's get into Okta. Alright, so what actually happened in the quarter? Okta just reported their earnings. Allow me to do a quick read. Revenue came in at $761 million, up 11% year over year. Subscription revenue specifically was $747 million, also up 11%. Current remaining performance obligations, which is basically contracted revenue that hasn't been recognized yet, that hit $2,513 million, up 12%. Non-GAAP earnings per share came in at 90 cents, and free cash flow was $252 million, which is a 33% margin. Now I want to be honest with you, none of those numbers are going to make anyone's jaw drop. 11% revenue growth is not the kind of number that gets people excited at a dinner party. Not that anyone gets excited about revenue growth at dinner parties. Maybe I do. That's probably why I don't get invited to dinner parties. But here's what matters. This is high quality growth, strong free cash flow, improving profitability, a healthy backlog, continued traction with large enterprise customers and partners. And the guidance, this is the part that really tells the story. The guidance was not amazing. It was moderate, almost cautious, and the stock still ripped 11%. When that happens, when a company gives you fine guidance and the stock jumps that hard, it almost always means one thing. Investors were positioned too negatively. The bears had built a case that Okta was a maturing SaaS company with slowing growth and limited upside, and the earnings report gave the market enough evidence to say, actually, hold on. This business is more durable than we thought. The margins are real, not temporary. Product expansion is working, and there might be a second act here. Now, before we talk about why identity matters in the AI era, I need to make sure we're on the same page about what Okta actually does. Because most people, even a lot of investors, reduce it to, it's a login company. Single sign-on, multi-factor authentication, the little pop-up that asks you to approve a notification on your phone. And yeah, it was indeed a hassle to use back in my corporate days, by the way. I remember one Windows update conflicted with Okta service for about a week, but that happened a few years ago. With that said, at its core, Okta is an identity control plane. What that means is, Okta's job is to verify who or what is asking for access to something, decide what that entity should be allowed to do, and then enforce that decision consistently across applications, cloud environments, devices, APIs, partners, contractors, and increasingly AI agents. The company operates in two main buckets. First is workforce identity. That's for employees, contractors, partners. Single sign-on, adaptive multi-factor authentication, device and risk-based access controls, lifecycle management, governance, privileged access, all the stuff that determines what a human inside an organization can touch and when their access should change or expire. Second bucket is customer identity through Auth0. This is for app developers and consumer-facing products. Sign-up, sign-in flows, API authorization, social login, passwordless authentication. It's a developer-friendly identity stack for building apps and digital services. This dual structure is actually important. A lot of identity vendors are strong on one side and weak on the other. Okta is trying to own both enterprise workforce identity and developer/customer identity. That's a wider moat if they can pull it off. So here's something that Wall Street analysts don't always articulate well when they cover this space. Authentication, the act of logging in, that's table stakes. Every company can do that. The hard part, the part where Okta earns its revenue, is everything around the login. I know it might sound boring to some of you, but think about it this way. In a modern enterprise, you're not just asking, can this person log in? You're asking, who is this user? Is this device trusted? What application or data are they trying to access? What role do they currently hold? Have they changed departments recently? Are they a contractor whose access should have expired last Tuesday? Is this actually a human, or is it a bot, a script, an API client, a service account? Should this action require additional verification? Should privileged actions be isolated, logged, and automatically revoked, etc., etc.? The complexity is not the password prompt. The complexity is policy, lifecycle management, interoperability across dozens or hundreds of applications, and the sheer sprawl of modern enterprise IT. Okta's value proposition is strongest when a company has many SaaS applications, hybrid cloud infrastructure, non-Microsoft environments, partner access requirements, customer-facing apps, multiple identity sources, and compliance obligations. So the product is less about auth wipe and more about being a neutral layer that sits above a messy, fragmented enterprise stack and makes sense of it. Now, I see this a lot in comment sections and analyst notes. People lump identity and security vendors together like they're interchangeable. Well, Cisco does security, Okta does security, what's the difference? And that's like saying cats and dogs are the same because they both have 4 legs. Sure, technically, but one of them will fetch your slippers and the other one will stare at you with contempt while sitting on your laptop. Very different animals. Simple version. Cisco historically comes from network and security infrastructure. Firewalls, traffic inspection, endpoints, secure access paths, broad security architecture. Cisco secures the pipes. Okta comes from identity as the core control layer. It secures identities, sessions, entitlements, application access, login flows, and access decisions for both humans and non-humans. Okta secures the actors. Cisco can absolutely do identity-related things through its security stack, but identity is one component of a broader architecture for them. Okta's entire company is organized around a single thesis. Identity is the new perimeter. That gives Okta a few specific advantages. First, neutrality. Okta is attractive precisely because it's not tied to one operating system, one cloud, one device ecosystem, or one productivity suite. If a customer runs Microsoft plus Google plus Salesforce plus Workday, plus Slack, plus ServiceNow plus custom internal apps, a neutral identity layer that works across all of that is genuinely valuable. Second, cross-application depth. Okta integrates identity across thousands of apps and systems. That's their core competency. Third, the developer angle through Auth0 gives Okta a stronger developer-facing motion than most traditional enterprise security vendors. Fourth, their product roadmap around governance, lifecycle management, privileged access, non-human identity, and agent identity fits naturally into where the market is heading. So Okta wins when the buyer says, I need the best independent identity layer that works across everything I already have. Alright, this is the part everyone wants to talk about, AI. And I want to be careful here because the mainstream narrative is directionally correct, but often way too shallow. The shallow version goes like this. AI creates more security demand, so Okta benefits. True, but incomplete. Like saying cats like boxes. Yes, but why? What's actually going on? Here's the deeper point. AI doesn't just create more users. It creates more actors. Historically, identity systems mostly managed employees, customers, contractors, and service accounts. Humans, basically, plus some machine accounts. In the AI era, you now also get agents acting on behalf of users, autonomous workflows, model-connected applications, bots with delegated authority, and machine identities proliferating across APIs and tools. That creates a fundamentally harder problem. It's not just who is this human, it's how do software entities get scoped, authenticated, delegated, and audited. A lot of jargon, right? Let me give you a concrete example. Imagine an AI sales assistant deployed inside a company. This agent reads the CRM, drafts emails, updates records, pulls pricing data, accesses customer documents. Now ask yourself, what is this thing? Is it a user, a service account, an application, a delegated actor operating on behalf of a specific employee? And what permissions should it have? Read-only, scoped per user, time-limited, action-limited? Does it need manager approval for certain operations? Does every action need to be auditable for compliance? Now multiply that across an entire enterprise with dozens or hundreds of these agents. This is a very Okta-shaped problem. Agentic AI increases the number of identities, sessions, entitlements, and trust decisions that need to be managed. And that's where Okta could genuinely expand its total addressable market. But, and this is important, I want to pump the brakes a little, because I'm a cat, not a cheerleader. There are real reasons the AI opportunity may monetize slower than the market hopes. First, many AI agents will be embedded inside larger platforms. Microsoft, Google, Salesforce, ServiceNow, Atlassian, these companies may manage a lot of AI identity inside their own ecosystems without needing Okta at all. Second, some of this value may accrue to cloud providers and security platforms instead. AWS, Azure, Google Cloud, CrowdStrike, Palo Alto, they all want a piece of machine identity and AI security. Third, pricing is not settled. Human seat-based pricing is straightforward. Pricing agent identities is trickier. Per agent, per action, per connection, per API call, per workflow. Until that stabilizes, revenue contribution is going to lag adoption. So yes, AI likely helps Okta strategically, but if you're buying the stock expecting a dramatic revenue reacceleration next quarter because of AI, you might be setting yourself up for disappointment. Then, there are a few things from the latest report that matter more than the AI buzzwords on the earnings call. First, the partner motion looks stronger. Channel and partner involvement in top deals was notable. That matters because it helps Okta scale enterprise penetration without proportionally scaling its own sales force. That's leverage. Second, cash flow quality is improving. The market has been increasingly rewarding durable SaaS businesses with real free cash flow, especially after years of punishing growth at all costs software names. Okta generating a 33% free cash flow margin puts it firmly in that durable compounder category. Third, and this is the one that keeps me grounded, guidance is still only moderate. If management truly saw immediate AI monetization on the horizon, you'd expect more aggressive guidance. Instead, they're being prudent. That tells me AI demand is probably real, but monetization is still early, and the core story remains execution plus expansion, not an instant AI windfall. So how should you think about Okta in the context of AI? Here's my framework as an actual former user of its service. Okta is not primarily an AI model winner. It's not winning because it builds the best foundation model or the best chatbot. That's not the game they're playing. Okta is a candidate to be an AI governance and access control winner. If enterprises deploy many AI agents, and the trajectory suggests they will, those enterprises will need identity authorization, delegation, monitoring, governance, and compliance trails for all of those agents. That is Okta's wheelhouse. The opportunity is strongest if AI becomes truly agentic. If AI remains mostly chat with a copilot inside an existing app, Okta benefits some. If AI becomes autonomous systems taking actions across applications and data, Okta benefits much more. So Okta is effectively a leveraged bet on a future where software environments become populated by many semi-autonomous digital actors that require enterprise-grade identity controls. That's a strong thesis, but the size and speed of monetization remain unproven. The 11% pop after earnings wasn't the market saying, Okta is suddenly a hyper-growth AI company. It was the market saying this business is healthier than the bears thought. Profitability is credible, identity remains strategically important, AI agents create a plausible second leg of demand, and the valuation had room to re-rate because expectations were too low. That's a much more rational story than AI hype. And let's be real, I believe the rational stories tend to be the ones that hold up. That's the breakdown. Okta is not a broken SaaS story, and it's not an overnight AI rocket. It's somewhere in between, and the market is finally starting to price that in. Whether it's fairly valued now or still has room to run depends on how quickly the agentic AI thesis materializes. And that, nobody knows yet. Not me, not Wall Street, not even the cats, although the cats would never admit to not knowing something. If this helped you think about the stock differently, hit like. If you want more breakdowns like this, subscribe. Thanks for watching, DataCat out, and I'll see you in the next one.